name is Stuart and I am the host of the Gspröch podcast from Wyden. I hope that everyone who listened to the last podcast with René Lange from Lutzener Kantonalbank gained some really great insights into how a traditional and well-respected bank built out and went to market with digital asset offerings to its customers in Switzerland. Now, with today's podcast, I'd like to turn our attention to how regulation of digital assets will change the game in terms of how crypto and digital assets will be perceived and trusted, and how regulated financial institutions will be able to finally adopt all of the benefits of digital assets and build infrastructure to provide their retail and institutional clients with regulated digital asset services. So, 2024 marks a pivotal year for digital assets. In particular, the market has hopefully pulled out of the last crypto winter, but more importantly, within the European Union, the EU's new markets in crypto assets regulation finally comes into force in December of this year. We probably all know of it in its short version as MiCA, and we will be using this term throughout today's show, which focuses on just that, MiCA and its impact to the market. Now, MiCA's introduction imposes new compliance requirements on crypto asset service providers known as CASPs, and which covers any entity providing services such as crypto trading, brokerage, custody, or advisory. This also includes sell-side arrangements by banks and brokerages. This is obviously a hot topic for regulated institutions within the EU and also potentially on a global scale, as other regulators such as in the United States and the United Kingdom will be closely monitoring the adoption and success of MiCA. So this podcast is not just for our EU listeners, but for everybody who is interested in understanding digital asset regulation and its implications and benefits. And this now brings me to my special guest today, who is going to provide his wealth of in-depth knowledge of digital assets and MiCA from working alongside banks and other large financial institutions to support them on their journey and roadmap into digital assets. I'd like to extend a warm welcome to Jan-Michael Steiner, who is a principal consultant at Capco. Jan has been supporting institutional clients with setting up their MiCA-compliant businesses or business units, and Jan has some excellent insights and experience to share with us all today. So Jan, it would be great if we could kick off by you giving an intro into yourself and also the amazing work that you and the team at Capco do today in digital assets.
Hi, thank you so much, Stuart, for having me on the show. It's truly an honor to be part of the very first podcast with video. But jokes aside, for us at Capco, MiCA is obviously highly relevant, as you said, as we support banks, asset managers, and insurance businesses in Europe and beyond on their DLT journey. And I myself have been working with digital assets now for several years. Nowadays, as you said, as the DLT lead for Capco Central Europe, meaning I have supported clients from developing digital asset strategies to kickstarting first use cases, such as crypto custody business for institutionals, for instance, and also just recently developed probably one of the most complex crypto trading platforms of a bank in the EMEA region, all the way from concept to go live. And what I can tell you is that in many of those projects, I came across MiCA. And now, as you said, with the regulation kicking in at the end of the year, or some of it already end of this month, we are, of course, often being asked as Capco about it by our clients. So I hope today we can really provide some value for your listeners and also answer some of those questions.
Thank you very much for the intro, Jan. Really, really appreciate it. So let's kick off and start by gaining some of your insights into the general impact you believe at Capco that MiCA will have on the financial services industry and financial services companies in the European Union.
Absolutely, yeah. In my opinion, it's a very, very positive step forward for the European market. We can already feel that MiCA, while not even yet applicable, already injects trust into the market, right? So it benefits both consumers and providers. And the really big advantage here, in my opinion, is the access to a European single market. Businesses, as you know, can now offer their services across borders without the need of additional national licensing, thanks to the passporting being part of MiCA. And yeah, that might not sound so mind-blowing in the beginning, but take Bitpanda from Austria as an example. Right now, they hold, I think, 17 different regulatory licenses across the EU. I mean, they are rightfully proud of it, adhering to the highest standards here of compliance and security. But yeah, Stu, do you think that's the right environment for this young ecosystem to grow and prosper? I kind of doubt it. So in this regard, many see this regulation, of course, as a huge milestone for the industry. And for me, that's personally the biggest impact this regulation going to have. Also, as you know, as an industry, we have long called for this, right? We just wanted to have this unified regulation. I mean, you can go back to any conference or panel 2, 3, 4 years ago. You will find someone who calls for the regulator to step in, right? And rightfully so. It can help prevent incidents like FTX to happen again. It provides regulatory clarity for those companies who are already active in the market, like exchanges, for instance. So remember all those legal proceedings and fines in the US. That's probably, hopefully, then something of the past if there's clarity for companies how to provide services in the EU and be compliant. And then also, of course, it paves the way for established banks and asset managers to move into this market.
And that's a really interesting point. But let's just say if I'm a bank and, I'm a bank who wants to go into digital assets. I see the fundamental benefits. It's going to help increase my top line revenue. What would you say to a bank who brings Capco in? What would the sort of 1, 2, 3 main areas or fundamental changes that bank should think about or be considering if they want to operate as a CASP and they have to apply to their local regulator for a CASP license?
Good question. Well, this might sound a bit like a downer at first, but I think it's important to acknowledge what we're dealing here with, right? So when we talk about crypto, we're actually talking about an asset class that's still relatively young, fluctuates a lot in value, right? Still lacks at least, let's say, a generally accepted economic value. And I'm aware that this might not sit well with some of your audience. And that's very important. There's a very high operational risk of losing access to your funds or get frauded, etc. So why I'm saying this? Because I think those characteristics, they don't just go away with regulation, but I think it's the responsibility of each bank here offering services to have robust measures in place to avoid any misconduct and protect their client assets. So in general, the goals of the regulator with MiCA here and the goals of banks themselves should be very much aligned. Now, having said that, I think it's clear that MiCA impacts different market participants in different ways, right? So existing providers, they definitely must prepare for stricter licensing requirements here, and then the ongoing supervision. So this applies to exchanges, wallet providers, and other crypto service providers. For instance, exchanges, as you might have heard on the market, may be forced to delist certain stable coins from the platforms, right? Take OKX or Binance as an example. Both announced that they will delist USDT in Europe due to MiCA. So unregulated products will be driven out of the market. Also, existing licenses will need to be transitioned. And that's definitely not a lightweight here. And on the other hand, and that kind of goes back then in the circle to your question, banks and asset managers that are not yet active in the market, for them, MiCA finally provides this solid regulatory foundation, which also, and that's something we feel in the discussions with the banks and stakeholders in the banks, fosters the internal trust. Great example here is, for instance, the partnership between Deutsche Bank and Bitpanda. They're now collaborating on real-time crypto payments, which improve the transaction efficiency and security to those Bitpanda users in Germany. And I believe that's something that has been really unthinkable of just a few years ago. A regulated German bank with more than 150 years of history offering crypto on and off ramps. So we're seeing a lot of movement here now that it's possible to operate with this clear regulatory framework. But still, many banks are now realizing that they kind of lack this internal technical expertise and knowledge because they haven't really invested the time or resources to develop it in the past. And as a result of that, there's now this pressing need on the market to quickly build up expertise and effectively enter the market. So I guess, that's also something piling up in your inbox, right?
Absolutely. And I think those are really, really critical insights that you've given to the listeners today. It's all about providing the right products and services and offerings as a bank to your clients, be they retail or institutional. So as a bank, you've got to consider what type of products you want to offer in a risk versus reward environment, plus what do we need to then set up as a business, both in terms of compliance, legal, technology, infrastructure, partners, services, in order to achieve that. So I'd like to really maybe focus on one area for a moment. So as Wyden, we are a technology company focused on providing advanced infrastructure to support the complete digital asset trading lifecycle for banks, brokers, and other financial institutions. It would be great if you could provide some insights or talk us through some of the different trading models that you're starting to see that banks are implementing in order for them to build their own offerings to both retail and institutional clients, whilst managing, as I said earlier, that risk versus reward profile and also ensuring compliance with MiCA as well.
Certainly. That's a super interesting area at the moment, as multiple banks have already surpassed what I would call the custody stage, or are looking for a profitable business case right from the start. And when it comes to digital asset trading setups used by banks, there are actually a few different approaches we commonly see. As you know, MiCA follows existing regulation, like MiFID, for example. So some even call it MiFID Light, even though I don't really agree, because in some instances it's even stricter. But anyway, some of the terminology used there in MiCA might sound familiar to listeners who are well aware of MiFID. So the most relevant ones there when it comes to trading are the execution of orders for crypto assets on behalf of clients. So that means the bank basically concluding agreements on behalf of the client to purchase or sell crypto assets. Then there's this model called RTO in short, which means the reception and transmission of orders for crypto assets on behalf of a client, where the bank as an intermediary passes on the order to a liquidity venue to get it executed there. And then third, there is the operating of trading platforms for crypto assets. Means that the operator manages a multilateral system which brings together or facilitates client orders between each other. So those are the general concepts, right? And what we often see here is that banks start with a rather simple setup to dip a toe in the water, so to say. That can be either under MiCA understood as execution of orders on behalf of clients in an RFQ type mode, for instance, or reception and transmission of orders. And why is that? It's because those methods are relatively low risk, I would say. They are familiar from other asset classes, and compared to the trading platform, to which I will come later, straightforward to implement. So banks can start here with just a few partners, and sometimes even reuse existing system and rails, right? That means you may even start with one agency broker providing the best execution capabilities. And then along the way, as also the volume and interest of your client grows, you can expand your operation by connecting to multiple liquidity venues and then ensuring best execution for your clients yourself. There are actually many ready-made solutions on the market that can help with this transition, right? Like also yours. And this is usually the setup most banks in Europe we see start with. But then for me, personally is the most exciting part that actually starts with the operation of a trading platform of crypto assets. So I think here, and that's the third method mentioned in MiCA here, banks have significantly more opportunities, right? They essentially become the liquidity venue themselves, creating and aggregating local liquidity. And this setup offers more control, potentially higher margin, but, and that's probably something you just had in mind, also requires substantial investment then in technology and expertise to manage this order flow and ensure, for instance, low latency 24/7, 365 days a year.
Absolutely. I think just one last question for you on that, just in terms of what you're seeing from an EU MiCA compliance perspective and banks adopting. Do you see the initial use cases being more in retail or institutional in terms of their client bases they go to offer services to?
I would say that really depends, right? We see both. However, it kind of depends on the market, because here in Germany, right, we were quite fortunate to have some regulation in place already for a while, but that was obviously not the case everywhere in Europe. And so also the different countries developed in a different way, I would say. So we in fact had a very diverse market when it comes to crypto regulation. Take Poland as an example, for instance. So their efforts involved a register for VASPs that was not even close to a licensing process. Essentially, it was just a simple registration that cost a couple of €100. Some AML-related forms had to be filled and provided, and that's it. Because the main focus there was to counteract money laundering and terrorism financing in regards to crypto. So really no wonder that Polish banks haven't been involved in this market due to a lack of comprehensive regulation here. I mean, imagine you're part of an executive board of a bank and have to decide whether to invest in this area without a regulatory basis. It's kind of understandable that they were rather hesitant to take any significant step forward. But now with MiCA, they have this clarity. In those markets, there's a high demand, especially from the retail side. So some of those banks may think about offering something in terms of retail services here. While in other markets where we have this regulation for a longer time already, usually we saw institutional cases start first because they were less complex and maybe less risky. You do not have to automate everything, right, and be available 24/7 for your institutional clients. So it's really diverse. Yeah.
Yeah, and we're, I concur with that. We're seeing a plethora of different use cases, deployment models across both retail and institutional. It's a very interesting dynamic time to be in this industry at the birth of MiCA and how we see that mature and grow. If I'm a bank and you talk about the executive board, but what kind of KPIs or measures of success does a bank should be looking at in terms of assessing whether their chosen strategy is the right one?
Well, that's a tricky question, right? And we always also often are being asked this because, especially due to this volatile nature, right, of especially crypto assets, can be quite challenging to formulate the right KPIs here. And crypto assets are, of course, just one part of such a digital asset strategy. But relating back to our discussion about the trading of crypto asset, I think there are several key metrics one can focus on. And that's first, obviously, the trading volume, which is a crucial indicator, which need to be monitored over time to understand your market engagement and your position in the market, because as we all know, from the crypto winter, volumes across the board can fluctuate a lot, right? And then secondly, most important, liquidity is another essential measure because it showcases a healthy trading environment for your customers, right? It enables clients to trade without significant price slippage, for instance. So that's another measure you should look at. And then, of course, user growth and the number of active users, a very fundamental metric to measure the success of this particular use case, maybe. And that's what I tried to open up in the beginning. The space ecosystem of digital assets are much more than just cryptocurrencies. And that's also what banks see there. So for many banks, this cryptocurrency use case just serves as a door opener to a truly exciting ecosystem. And then, of course, we are also talking about different, let's say, KPIs or indicators of success. So beyond those quantitative measures I mentioned, I think it's equally important to also track the progress of the journey within the organization itself. So this involves awareness and training of staff, for instance. So promoting this awareness within the organization about the potential use cases of digital assets, ensuring that the staff understands those new market dynamics here and is also able to provide information and advice to clients. That's crucial. Or another aspect are, for instance, technical capabilities. So the ability to sign transactions on the blockchain with smart contracts, for instance, or taking a bond into custody and perform lifecycle events. So there are multiple things you could look at and that are worth tracking and worth to be embedded into such a strategy. I mean, if we believe that this technology is the future of financial assets, it requires a technological replatform, right, of global capital markets, and such transformation takes time. I mean, take Bitcoin, for example. It's around now for 15 years, and we are talking today about MiCA, the first uniform regulation to regulate this asset. So it doesn't happen by night. So coming back to your question, I think it's crucial to incorporate appropriate milestones in such a strategy and also quick wins so that you can make this incremental success visible to the market and also internally.
That's very much what we hear. And also, just to take one of the points that you mentioned around awareness and enablement of internal staff at banks, that was really one of the key points that René Langer made at Lützener Kantonalbank on their digital asset journey and their go-to-market strategy. It wasn't just educating the market and clients in terms of what could be offered, but it was providing that level of awareness and education so everybody within the bank understood the benefits of digital assets and to demystify maybe some potential negatives they've heard in the wider ecosystem or the wider press. And maybe I could then just turn that into more of a macro view from you for the moment. And how do you potentially see MiCA impacting on that overall digital asset strategy for a bank? And is that digital asset strategy start and stop with crypto, or is crypto effectively just that first step on the onboarding of digital asset and infrastructure rewiring, and really, all the way through to immutable tokenization of assets?
Yeah, that's what we often see. So as said, the crypto use case is often just a door opener and a use case with a profitable business case at the moment already, where you can already meet client demand and profit on the volume. So that allows you to basically build the basis for other use cases, right? Where you also need a custody function, for instance, or also need the connection to trading venues. So this use case of crypto assets basically helps you to finance the infrastructure, for instance, for a key management solution that is then being reused in other use cases, for instance, in the tokenization of bonds, certificates, equities, and the like. And that doesn't really mean that this crypto use case is just a temporary thing. And it's also not a lightweight to pull off, right? Especially now with MiCA, we see that some banks, they act like, okay, we're a bank. We know how to operate licensed businesses in the financial sector. MiCA is just a very similar thing to MiFID, something we have been dealing with for years. So we'll just apply for another license and that's it. And that's maybe a bit too simplistic here. So there's a lot to prepare if you want to be compliant in this business. Yeah.
And I think that in terms of being compliant, we've moved into very technology has allowed us to become global, right? People have become transient. People can work in different countries. People want to transfer money across border. So even though regulation is either country or jurisdictional, regional, we're in a global business where and everybody interoperates with each other. So if we even took a zoomed out even further, and we looked outside of the EU itself, do you think MiCA will have an impact beyond the EU, and how could that play out? For example, we're seeing introduction of regulation in South Africa, the new just announced regulations in Turkey, and for example, CVM 175 driving adoption in Brazil. And I'm sure the US will be keeping a close eye on MiCA. And what are your thoughts here in terms of MiCA potentially being seen as that enabler for sort of more global adoption of digital assets?
Yeah, I'm pretty sure that MiCA will also have implications outside the EU. So first, it will definitely influence the global regulatory landscape for crypto assets, because it also applies to crypto businesses operating outside the EU, right? They also need to be compliant with MiCA requirements when they want to deal with the EU MiCA customers. MiCA is actually quite strict in that regard. And then second, we can already observe other jurisdictions adopting some of those standards set forth by MiCA, right? You mentioned Turkey as an example. If you go through that bill, there are obviously many differences, I have to admit, when it comes to the definition of crypto assets, the rules surrounding each category, etc. However, also the regulator is introducing here a licensing regime and operating standards for trading platforms, with some of those requirements being quite similar to MiCA, and then bringing them under the regulation and supervision of the Capital Markets Board there, or short SPK, right? So I'm actually really curious to see how the SPK will be able to handle all those applications now once this gets into force. But yeah, that's definitely something where maybe global regulations also come together and be more compatible with each other. Yeah.
So do you think there will be different regulators will coalesce some of their requirements, because everything is much more global and cross-border? And so actually just to bring even more global standards that, sometimes we've seen in different pockets in the TradFi world. And what do you think, potentially just one or 2 points on what would be those, the one or two biggest issues or challenges for a regulator enforcing action or a new regime?
I mean, that's a very good point, and a great wish I think the entire industry globally would have, right? However, the issue I see here, first of all, is that not even within one jurisdiction, the multiple regulations really comply with each other, because we said in the beginning, right, MiCA is now, let's say, the MiFID Lite, or a sort of a MiFID for these new types of assets. But still, there are differences when you go into the details, right? I can give you one example, for instance, for an area where MiCA diverts from MiFID. When you look at insider trading, for instance, it's essential to develop a robust conflict of interest policy there, and then the corresponding processes, right? And the traditional firms may have that in place already for other assets like bonds, equity. That's nothing new to them, right? So you might think, okay, I'm already compliant here with MiCA, but then again, you need to review and potentially update all those processes and policies, because MiCA is not always so straightforward here. The question is like, what if employees trade in other products like ETPs with indirect exposure? Is it necessary to cover all those activities in the policy, or do I have to pre-approve such trades? I mean, something you probably know from your practice is also to give another example here, the obligation to publish this pre- and post-trade data, right? That needs to be really quick under MiCA, even quicker and stricter than in MiFID. So what I'm trying to say here is that not even within one jurisdiction, the standards are aligned, so to say, across the assets. So I find it difficult to believe that this will work on a global level, even though that's obviously something we should, as an industry, call for. Yeah.
Absolutely. And I think that the difference is you've made couple of points here. It's not just implementing new regulation and applying for a license to meet with that regulation. It's digital assets is almost a rewiring of traditional financial systems and infrastructure and networking and connectivity. And therefore, it's not just a case of applying, but it's also a bank needs to consider the technology and infrastructure. And therefore, in light of that, and in light of MiCA and a bank's own compliance and relationships with their third parties, such as their partners and service providers, how should banks approach that whole due diligence with partners in that DD phase in the digital asset ecosystem? We've got brokers, there's exchanges, you've mentioned custodians, and even technology providers like ourselves, who all have to be involved if a bank wants to implement a digital asset offerings for its clients, because generally speaking, a bank will not build all of that partnership and infrastructure themselves.
Exactly. Yeah. And for me, to even add on top of that, the most important aspect here in MiCA is that it establishes an end-to-end view, if you want so. So meaning CASPs have to ensure that other CASPs being part of their value chain are also compliant. So it's kind of a ring fencing of crypto assets being traded and safe kept in Europe, right? So that will definitely become, and that's also what we see in our projects here, and a very important aspect of any due diligence process. And I know from practice that some of those requirements set forth in MiCA could really cause problems here, especially when your partners are maybe not EU-based and may not follow those same standards as MiCA introduces them, right? You can maybe, just to make this a bit more understandable, take the payment of order flow topic as an example, something that is quite established, right, as a compensation mechanism. So the broker that receives funds from a market maker for introducing volume to the market maker, and such kind of mechanism is now prohibited under MiCA, right? So as a CASP, you're prohibited from receiving any kind of compensation or benefits in exchanging for routing your orders to a specific platform or service provider here. There are not even any exceptions in MiCA if you dive into the details. So it's again stricter than MiFID. Yeah, that's a practice that is commonly used in the market and something you have to watch out for when doing the due diligence with your potential partners, because as I said, they also have to be compliant to MiCA then in the end.
Absolutely. I could not agree with you more. But maybe if we can just take a change, and I would like to move on to potentially the final topic of today's podcast. And you mentioned earlier about stablecoins and USDT, for example. So as we know, MiCA introduces a new regulatory framework for stablecoins. It means the banks actually have an opportunity to explore different ways to utilize stablecoins and their impact within the digital asset strategies they want to deploy. What do you see as some of the opportunities or challenges of using stablecoins if you're a bank?
It's indeed a topic we are increasingly being asked about in the European market. Because from my perspective, those stable coins, they really present an exciting use case for banks, especially here in Europe, where there's a clear gap in the market. I mean, currently, if you look at the statistics, about 90% of stablecoin markets are US dollar denominated, right? And there's a significant opportunity here for first movers in Europe. And in our discussions about central bank digital currencies, deposit tokens, and stable coins, we often hear that those stable coins have numerous use cases for banks that could be utilized. For instance, take crypto on and off ramps, IoT payments, cross-border payments, settlement of blockchain-based securities. So there's really a multitude of use cases where you could apply these stable coins in. And also some banks like SocGen or asset managers here in Germany, DWS, are already venturing in this area. And I really believe that we will see more institutions following suit here. as there are also multiple positions oneself could take in this value chain. I mean, it's not about just issuing this stablecoin. There's also a business case for a reserve manager, for the distributor, etc., etc.
Do you think that stable coins can play a big part in the whole round trip in the trading life cycle? Could they be a solution for, you've got the trading of crypto, and then you've got the settling of crypto, but then you've got the funding and the settling of accounts, which are normally, either in EUR or USD. Then you have to, as you mentioned, have these, fiat on and off ramps as well. So, if we had an ecosystem where there was just one, I'm a bank, my treasurer, I convert my dollars or my euros into a stable coin, and then all of my the liquidity management, the treasury, and the settlement is all done via stablecoins, not done via fiat. Would that actually simplify the market? And is that really the main use case of stablecoins?
Definitely, that's an exciting picture that you're drawing there, Stuart. And that's also something where this concept could definitely be deployed. However, there are also some bottlenecks for use cases, especially when it comes to the regulation here in Europe, because MiCA actually imposes some strict boundaries for stablecoins. Let's put it that way. For instance, as you may know, there's this prohibition of interest for stablecoins, meaning they aren't treated the same as other money market products, which, coming back to your use case with the treasurer, may undermine some institutional business cases here, right? And then we also have those Basel requirements. So if a stable coin is issued on a public chain, might fall under this Group 2 classification under Basel regulation. So this would impose then a high capital requirement, also posing a challenge for some of those use cases when there's exposure on the bank's balance sheet.
Yeah, absolutely. And I think one of the sort of every currency can fluctuate, right? But then you've kind of got a fluctuation of a currency, and then you've got this whole issue of potential depegging of a stable coin versus the currency as well. So, is that a risk that that is a big risk for a bank? Because if it's in dollars, you're open to the market, but everybody's got the same fluctuation. But in terms of depegging, then you've got a further risk factor as well.
Yeah, definitely. That's also an additional factor here to be considered. But I think you're kind of opening the Pandora's box here because there's so much to explore in this regard, Stuart. So I think that calls for an entire episode itself, this topic, because it's also something that we are, as I said, more and more asked for. And I believe, and that's also one thing that we see in the market, that there's a clear need for a regulated stable coin, EU-dominated, and that would also allow other market participants to analyze and assess the risk, for instance, of such depegging, as you mentioned, more in detail. Yeah.
Yes, and thank you very much for already signing up to the next podcast around stablecoins, Jan. I really appreciate you promoting that already. So I think on that note, I think it brings us to the end of today's podcast on MiCA and its implications for both financial services institutions within the European Union and globally, as other markets will carefully watch how MiCA is being rolled out. I would like to extend a very warm thank you to Jan-Michael Steiner from Capco for taking the time out today to provide us all on this podcast with some immense and interesting insights into not just MiCA itself, but also the implications and considerations that financial services institutions must take when thinking about launching a regulated digital asset offering to their clients. And finally, I would like to thank you, the listener, for taking the time to listen to today. The next edition of the Gspröch is going to be announced very shortly, and we already have an awesome set of podcasts and speakers lined up for the rest of 2024. And thank you to add to that as well, Jan, on the topic on stablecoins. So please feel free to spread the word and share this podcast with friends and colleagues who can listen on various platforms such as Spotify and YouTube. So until the next time, thank you all for listening for today's episode, And thank you very much to you, Jan, and also to the Capco team. Thank you very much.
Thank you so much, Stuart, for having me on the show today. I also hope it was really insightful for your listeners. And if any of your listeners would like to deep dive into any of those topics we discussed today, just hit me up on LinkedIn. I'm happy to follow up on this with you.
Very well said, sir. Thank you very much for your time today.